Good morning, Ken Long from Tortoise Capital on, let's see, July 26, 2013. Just thinking out loud here about the use of the RLCO framework on 2 hour charts. Thinking about swing trading. What I've got shown here is the usual lens, but with 2 hour chart, or 2 hour bars, excuse me, and 1 month of trading data, so about 22 data points. Or 22 days, excuse me. That's 88 data points, about approximately 90 data points. And so the red line is the 30-period moving average, the center of the river. The river is the dark shaded area, floodplain is the lighter shaded area. Those represent +1 and +2 standard deviations, plus or minus 1 or 2 standard deviations of the 30-period Bollinger Band. The dark green line is the 90-period regression line. Black line is the 30-period. Blue line is the 10-period regression line. So the fast, medium, and slow, if you will. This is a 200-period moving average. This maroon line, the orange line, is a 200-period moving average, but it's the average of the high, low, and close. I've just been trying to think my way through this to see if this makes any kind of difference compared to a 200. I'm still thinking about that. That's a prototype. These horizontal red lines are support and resistance levels that carry over from the daily. And we've been having some success with 2 hour bars in the VIX trade. And so what I'm looking at on this one for swing trading is that we had this congestion zone down here. And then as it starts moving up and out, we get the beginning of trending behavior as it leaves sideways quiet channel here at about 162, and then this nice move that lasts about 15 days. And you notice the 90 crosses this 200, crosses the mean, crosses this modified 200, leaves the river out around here. As the river starts slowing down, notice how it leaves the 90 behind, and the 90 is slow to turn, but now the 90 is coming back, sort of confirming that that this weakness is significant. Had a nice move here when price and everything is out of the river. You notice the river runs clean and fast, and the red is unencumbered by all this noise. Now we've got this crossover. Now when the 30-period regression line crosses the Bollinger Band mean, we've treated that as a pretty significant signal. It came close here at the start of this move, this consolidation. We could almost say this was a consolidation zone because the 30 regression line didn't cross the mean, but then started another leg up. But now we just had that cross here a day and a half ago. And so now we're seeing weakness unfolding to the downside. And so using these daily resistance levels, about 167.20, 164.80, and then all the way back down to 161 are the price targets on the downside. Now, if it holds anywhere north of 167.20, then we have a chance for it to come back up and test 170 again. I would take that as a favorable sign. But in my view, this run is done, and now we're going to see what this next leg is from the time that the 30-period crossed the 30-period regression line crossed the Bollinger Band mean, and pointing downward at least for a while. So we get two levels of support. As long as it holds above this second level of support, we can say that this leg is intact, and then these are buy on dip opportunities because we are in a bull, normal, almost bull quiet mode right now. So that's my read on the 2 hour charts, looking at swing trade time frames. I see this as a buy on dip opportunity if we get a higher low here and a higher low on the next one. I'd be willing to buy around 168-ish, maybe 168 and a quarter. I think that would give us some additional information. If we look a little closer at that now, this is still pretty favorable. We got the horns of the dragon here outside of the floodplain, and at least it didn't make a new low. What I'd like to see is this thing close, and then have a higher low on the next one, taking out the swing high here, and then I'd be looking at a move up to 168, like this last one. Essentially, what we see in this. But I would want to enter not later than 168.40 with the idea that it would give us, 1 unit of reward, 2 units of reward. That's a reasonable proposition on the upside, and so if we could enter around 168.40 ish, with a stop down here at 167.80 ish, that's our 1 unit of risk, and we'd have 2 units of reward. I see that as a reasonable place to enter. I'd like to see it hold here, ribbon stay solid, and then we almost have that Anderson regression line stretch, or the Z-swing, if you will, with the ribbon coming out of the floodplain and then reversing, and then we buy here at the edge of the river. So that's Ken Long from Tortoise Capital with just a quick read on the market health using the 2-hour RLCO frame. Keep your risk measured and your powder dry.